Hey everyone, welcome to the KE Report and another daily editorial as we are chatting with Dave Erfle, founder and editor of the Junior Miner Junky. As always, we're going to be focusing on the precious metals sector, gold, silver, and also the underlying stocks. Gold is having another good day, and it is now, again, just holding fairly easily above that $2,700 level, closing in on 2,800. Silver is back above $31. Overall, still strong metals prices, and the stocks are doing decently. GDX, GDXJ, they've had a nice rebound. SIL, that is still very much struggling. Same with SILJ. But Dave, more just on gold here. Any importance in the recent gold moves here? Again, closing in back on that $2,800 level.
Yeah, I mean, the 12-week symmetrical triangle I've been writing about for the past several weeks, gold is breaking out of that right now. It's already broke, we've already seen symmetrical triangle breakouts in the Canadian dollar, in euro gold, and Swiss franc gold. So US dollar is just following suit here. As far as the gold stocks and silver are concerned, though, they're both attempting to, well, the gold stocks they're attempting to break out of their falling wedge. We had about a 23% correction in GDX and GDXJ after moving up about 70-80% from last February. But as far as silver is concerned, it's still yet to break out of there. It's trying to right now, but it's still lagging. And that's a little bit concerning. But one big positive is since the beginning of the year, Newmont Corp, the largest gold miner, and basically the sector bellwether. That's where your generalist is gonna come in to first. They're gonna come into your Newmonts and your Francos. It's been leading not only gold, but it's been leading the mining sector. So that's good news. But it's been happening on a decreasing volume, and and it's also happening on low volume in GDX and GDXJ. So we need to get some volume associated with the breakouts above 47 in GDXJ and 37 in GDX. We need consistent closes above there with some volume to get me a little more excited as far as the stocks are concerned.
Yeah, Dave. It would be nice to see more volume in all of these mining stocks, but even in the ETFs as well. But Newmont being the heaviest weighted position in GDX, it is the bellwether stock. It is the stock a lot of generalists will turn to. Now, they've made a big push over the last, let's say, 6 months to divest some of their projects, which will help them with cost. It brought in a lot of cash to the company. We've got Q4 numbers about a month out from them. Do you think that this momentum could be sustained if they can show people they've got their ship turned around as far as costs?
Absolutely. I mean, it was Newmont's terrible quarter that pretty much torpedoed the entire sector when they came out toward the end of October, right? It's the gold stocks that started to show relative weakness soon. I mean, before the gold price hit that $2,800 level, and it's because of Newmont having that terrible quarter. So in Q4 though, we had the gold price was about another $200 higher. And they've divested a lot of those higher cost mines now. And matter of fact, they divested these mines for twice as much as they expected to get. So they've brought a lot more cash in. Their costs should be a little lower because they really disappointed on the high side on their all-in sustaining costs in Q4. So, but we're not going to find that out for another month. I think February 20th is when Newmont kicks off the Q4 earnings season.
Dave, do you see any hope that these majors start to look at growth? We keep hearing how they need to replace their ounces because all mines are depreciating assets. But also, you look into their portfolios with any of these majors, the biggest ones especially, they have a pipeline of projects 5, 10 years out that, look, these take time to build. They take staff, and we're not hearing these companies say, we're staffing up and increasing our expenditures in terms of building assets. So when or is it anytime soon that these majors are going to say, okay, we need to start acquiring assets and extending this pipeline, I guess, 15 years out?
Absolutely. It's already pretty much started. The year kicked off with the news that Rio Tinto and Glencore, I know these are copper focused majors, they've been talking about a potential merger. And, that'll probably stir the juices of maybe BHP going after Anglo American again, or somebody else going after Anglo American. I mean, this needs to happen. And what this has done, this Rio Tinto Glencore discussion, it's brought some eyes on this sector from generalist investors. I've seen several mainstream stories about it that rarely talk about what's going on in the mining sector. So we need to have more eyes focused on how underowned and undervalued this sector is in relation to the price of gold and the price of silver. I mean, these silver juniors are still very underowned and still very undervalued. And like Shad said at the opening of the segment here, that SILJ and SIL are still showing relative weakness here, and they really haven't really picked up. So that needs to happen. We need to see more M&A, and that grows their company a lot quicker than having to build these mines, because it's been such an arduous process now to build mines because of permitting and all these costs. It's a lot quicker to grow in M&A. So I really expect the M&A to pick up, especially if the gold price gets over 2,800 here on this move.
Well, Dave, just thinking about M&A, yeah, something like Rio and Glencore are combining, they would be the largest base metals company on the planet at that point, but it may spur BHP along. But these mega mergers, while they get generalist interest, they don't really get the animal spirits going in the retail space of the resource investors, because you really want to see your development project or the small producers taken over to get those kind of things going. Do people put too much focus on leaving it up to Newmont or Barrick in the gold space, or some of the biggest copper companies to do it in the copper space, when really it's the mid tiers that need to be more active? Because the mid tiers are quietly making money, they're producing at good prices, and they could grab those development projects and maybe build a up to $1 billion project or something like that. We've seen some $1 billion takeovers from the mid tiers. Are people looking in the wrong space for the takeovers?
Yes, I mean that's what we need to see. We need to see more takeovers in the junior space. We need to see more takeovers in the mid-tier space. I mean, the last high-profile junior takeover was a take under, right? When Agnico Eagle took over O3, and that deal's about to be finalized here in a couple of days. So we need to see more takeovers with nice premiums where everybody made money on the takeover. And as far as a lot of these development projects, a lot of these single asset developers, they need to merge with other developers, preferably with a developer that maybe has some cash flowing from a mine in production, to get more investors interested in this sector, and especially in these juniors. So we need to see more M&A in the junior space for sure.
Haven't we seen a lot of M&A? I feel like last year was one of the hottest years for M&A. As much as we want to complain that they were take unders, fact of the matter is the market sets the price, and if somebody isn't willing to come over the top, then that is the market price for this M&A. Last year I feel like was a big year for M&A though.
Yeah, but like you said, I mean, a lot of them were take unders. We need to see more takeovers with nice premiums where everybody made money. That's what we need to see. That's what gets the juices flowing. When you see these companies that are taken over for maybe like 30, 40, down to 80% lower than where their stock was trading several years ago. I mean, a lot of these companies hit their peak in 2020, and they still have really good assets, but the dilution and the time it has taken for them to de-risk these projects has taken the stock down 60, 70%. And if a company like that gets taken over, it's basically a take under. So most legacy shareholders and even investors that got in maybe early last year didn't make any money.
Well, Dave, there was a couple takeovers that people did get excited about. I would say that the Goldfields takeover of Osisko Mining was a win, where you got that 55% premium on an upswing. And the two that really animated people at the end of last year were those two silver takeovers, where you saw Core Mining go in and take over Silvercrest, where it was already trending higher, and where you saw First Majestic take over Gato Silver, where it was also trending higher. Do you think that we'll see that same tendency of companies not just going after distressed companies, but going after the best of the best and grabbing producing assets or the best development projects?
I think so. And my portfolio in the companies that I cover for my subscribers and that I've accumulated, I think there's several in my portfolio that could get taken out. But I'm of the ilk that hope they don't get taken out, because I'd like to see them go a lot higher before they are taken over. That's the rub here, right? I mean, sure, we all want to see more takeovers in the sector. We want to see more M&A in the sector, and we'd like to have it be one or two of our companies, but not too soon to where they haven't ran up really enough to where it's paid off for you to take a chance on them, because we want to see at least 3 times our money being made in these companies that we're investing in. And although I have 3 times gains in a couple of them, I'd like to see a lot more before they're taken over.
Okay, so what you're saying is we need a market revaluation before this M&A really picks up. But then that's the big question. What will it take for this market revaluation?
That is the $64,000 question right there. Will it take Newmont producing a really fantastic quarter with costs that are lower and exciting the sector, exciting investors to get into the sector again? Will it take a couple of really attractive M&As? Will it take major M&As bringing more eyes to the sector? I think it's all of the above. We need to see a lot of that happening. Bottom line is, the one main ingredient that we have yet to have in this sector to move this sector is Western investment in not only gold, but as far as the gold stocks are concerned. I mean, this is why you've got the gold price doing really, really well in a major bull market, but the stocks and silver are basically not following what the gold price is doing, because central banks don't buy gold stocks. Central banks don't buy silver. Central banks don't buy silver stocks. And we need that Western investment coming in. And it looked like we might have had a chance to see some sector rotation recently, when it looked like Bitcoin and the S&P 500 were showing topping patterns. But that was negated here recently when we had basically the H&S topping, the Head and Shoulders topping pattern, and the S&P being negated and the downtrend line being broken above here following the Trump inauguration. So we need to get those retail investors more interested in this sector before these juniors really take off.
So it sounds like still a lot of what we've talked about over the last couple of years, where the equity values need to move higher and play some catch up to the underlying metals prices. But the metals prices are doing their job. And quite frankly, companies are making money. We're just not seeing companies trip over themselves to replace their ounces and grow, I guess, for the sake of growth outside of their current assets. Although, again, a lot of M&A last year. Hopefully it continues this year, but I guess we need higher prices before that M&A happens. Look, chicken and the egg type of thing here. But overall, the sector still looks quite strong, but it is still a sector of the haves and have-nots, where the good companies able to raise money and some of the other companies that are lagging, they unfortunately continue to lag. Dave, we'll wrap it up here. Always great chatting with you. And again, Dave Erfle, founder and editor of the Junior Miner Junky. Click that link in the show notes to learn more about Dave's newsletter. Dave, nice chatting with you this week. Have a great rest of your week.
Thanks, guys. You too. Always a pleasure.